Good morning, good afternoon, and good evening to those of you around the world. Welcome to Trading Rebellion with your favorite analysts from Trade the Chain. My name is Nick Mancini, Senior Director of Research at Trade the Chain. We are also joined by Monte and CJ, both Senior Research Analysts at Trade the Chain, and we are here to break down everything going on early this week and into the full week, so we know what's happening on the charts and from the macro situation. So for the macro situation, there's really not too much news. I mean, we have some employment numbers on Wednesday, but those report pretty much weekly. But the big news, I would say, is we have an FOMC blackout period that technically began Saturday, but this is the first market open day that it begins. So we're counting it starting today, and FOMC is, I believe, next Wednesday or Thursday. It's on the 26th, so I believe that's next Wednesday, and that'll obviously be a very interesting day for volatility and the future of the markets, as we're currently expecting a 25 basis point hike. Remember, last one they paused, and we definitely saw a bullish reaction on the heels of that. So it'll be very interesting to see what happens here. The one thing I do want to preface to everybody, and I did some research, and the last blackout period was actually a bullish period, but we were going into one of the first rate hike pause since the Fed started hiking, and the previous blackout periods prior to hikes were either flat or bearish, meaning flat, maybe they went down Monday, Tuesday, Wednesday, and got bought back up Thursday, Friday, but generally no change in price action from when it started to when it ended, or it went lower. So just something to keep in mind as you're trading into FOMC. I would definitely be weary about being too bullish heading into a rate hike, but we're going to discuss what we're looking at on the charts shortly. So I'm going to go ahead and pull up what I'm looking at here for DXY. And what I thought was interesting, and we kind of went over this last week as well, but we pretty much straight drop over 7 days down to this 99.5, 99.6 level. And typically, if you watch how we trade, after a large move, we typically take a break on the trade, reassess our bias, figure out where momentum is headed, and then take another trade, depending on, XYZ data points being given. So this data point is very interesting because it's a massive move. And typically after massive moves, we either get a consolidation or we get a reversal. So what I'd expect here is if we consolidate and just kind of, sit around 100 to mid 99, I would probably expect price action to continue higher as prices, digest a lack of movement from DXY. But if we do end up, running up to this 101 level again, potentially higher, I would expect prices to pull back. And we have seen a lot of volatility around DXY around FOMC. So I think that's something to keep an eye on over the next few Trading Rebellion sessions as we talk into FOMC, because if this does spike, it may make me want to take some shorts on risk markets. So comparing that, directly over to what I'm looking at for equities, we're obviously near the recent highs. We need to break above this kind of 45.60 level to continue higher, else we're going to be stuck in a range. And right now, the Monday range is basically, it's sitting, 45.28 all the way up to this level. This could just be our range for the week. So pay close attention if we get rejected at this 45.60 level, because the Monday range is typically very important. Again, we are at the first blackout day heading into next week's FOMC. So an inability to break the recent high would be an equal high, which would definitely, which also could be a double top on the lower time frames, which may instill some fear. So keep a close eye if we get rejected up here. And then looking at Bitcoin in comparison to this whole DXY situation, I'm actually going to zoom out on the 4 hour. We're kind of moving down towards this range low. We've been talking about, Bitcoin tagging this range low for quite some time, and it looks more likely now, but doesn't mean it will happen. But if like I said, if DXY continues to inch higher, we could see Bitcoin inch lower heading into FOMC. And of course, if DXY is flat, we could just see some flat, ugly volatility. What I'd want to see for a long is, grabbing this liquidity here, which means sharp reaction down, and then a quick buyback up. That would make me want to take longs, even though we're heading into FOMC. So that's my quick overview over, major assets that we track. But, before I move on and let Monte and CJ kind of take it over from their perspectives and whatever charts they're looking at, let's pause here and let's take DXY S&P 500 and Bitcoin, and let's just talk about that. Do you guys think that DXY is worth watching heading into FOMC? Do you think that it will have any impact on Bitcoin or not, or the S&P 500? What are your guys' thoughts? Either one, feel free to take it.
Yeah, absolutely. I mean, last week was all about the dollar. Look at this chart. I mean, this is absolutely insane for the DXY to be making a move like this. And last week, this translated into some massive moves for a lot of the equities that we talk about often on this show. Things like Riot, things like Mara, Coinbase, also the Magnificent Seven, which I want to talk a little bit more about later. But one thing that I'm noting today, and this is something that it's just it's not necessarily tried and true or any sort of technical indicator, but just something I'm noticing is that first of all, you'd be hard pressed to find a period at which we had extended negative price action to this degree, like with this velocity for this consistent amount of time in the DXY. The most recent example would be here, and as you can see, that was met with a brief reversal, but ultimately continuation to the downside to the $100 level before we bounced. So really, this is kind of unprecedented territory. It kind of reminds me of what we saw here, and what we saw here was a massive drop in the DXY, like we got here, and then a lackluster bounce, and that's what we're getting. Like, this is not convincing. Following a drastic move like this, we typically get big moves to the upside, big reactions, especially when you're talking about the DXY. But we're not getting that here. We're not getting any sort of like reaction rally or bear or bullish engulfing candle from the bottom of this trend. So I think that, although the DXY had a historically bad week last week, I think the fact that it hasn't rebounded significantly today is a good sign if you're bullish a lot of the big names, particularly in the NASDAQ, or some of those crypto related equities. I know they're hurting today. CJ and I talked this morning about how Monday is historically the worst day for stocks, but also that makes it the best day to buy stocks, and I think that's going to be the case this week. So I think the DXY goes lower. That's my long-winded way of saying I think the DXY heads lower. We see it. The fact that it hasn't bounced after such a drastic and fast move to the downside tells me that we're going to see more, price action to the downside, thus more room for the equities to run. And that's a good thing if you're bullish right now. So that's basically what I'm seeing from the perspective of the DXY. And, to extrapolate that to Bitcoin, if the DXY continues to slide, I think Bitcoin grinds back up to the top of that range that you had highlighted, Nick. So keep an eye on the DXY. But the fact that it's not rebounding to the extent that we typically see has me thinking that the rest of this week, we could see some bullish price action.
And I agree with you to a certain point, and I definitely I agree with you if DXY seeps lower that we should see bullish price action. That much I agree with. But looking at the Bitcoin chart, and I think it's been a lot of difficulty trading over the past couple of weeks due to getting caught up at 30K. But for that bullish indication, are you taking kind of the technical perspective that we need to grab this liquidity before higher? Or are you kind of ignoring that methodology and saying, if 30K holds and DXY seeps lower, we're going to move up. Oh, I didn't mean for that to happen, but we're going to move up, from this 30K level. Are you kind of that mindset, or are you just patience is key for right now?
I think we could certainly see a retest of that level tonight during the Asian session. Something we haven't really talked much about today is how the of course we haven't because it's Monday, but taking a look at what we saw last week from the Kospi and from the Hang Seng and from other Eastern indices, they were looking kind of pretty weak. So I think we could see some weakness in Bitcoin tonight, driving us back down to that 29.5 level. If that does happen and we get a move down to that 29.5 level where, like you pointed out, we've seen those wicks drop to and people snatch up liquidity there, I'd definitely be looking to buy right from that 29.5 level. So because I do think that tomorrow is going to be a bullish day for equities, and as a result, we'll see Bitcoin show some signs of bullish price action, perhaps even heading all the way back up to that 31K level. So that's what I'm seeing. I do think it is possible. Actually, I do think it's likely that we retest that level that you had highlighted there, which all those wicks came down to about 29.5. We could see that as early as tonight during the Asian session. But CJ,
Yeah.
what are your thoughts, my friend?
Speaking of CJ, before you go, I wanted to kind of give you some flowers because, we talk about this in the TTC community a lot, and I saw you post it early this morning. But like Monte also said, Mondays are typically the most bearish day in the markets, and Tuesdays, in the inverse are sometimes the most bearish. And historically, that's been shown, by the data. I don't know if that's a quarter by quarter, kind of outlook, or if it's a 365 day outlook, but wanted you to kind of touch on that as well, CJ, because I know you put that in the TTC community this morning.
Yeah, I mean, I think the principles of, taking a break not only is important for the market, but also like societal structure as a whole. Like, I don't think we would be a civilized society if we didn't have weekends. Perhaps, I don't know. Regardless, in terms of like the DXY, I was considering longing it this morning because just the sentiment was so extreme last week. Also, hedge funds are officially not short the dollar. They can always continue to get more short. But I didn't long it because, like Monte was saying earlier, like in order to buy something, like I want it to show me something a little bit first. And then DXY just hasn't done that thus far. Now, an asset or an indice that has is the Russell. It's outperforming every single other US indice today. And perhaps it's because, we've been talking about this short squeeze of things like in the NASDAQ and things like ES. Those indices are basically neutral in terms of positioning. When you look at the Russell, out of all the other indices, it still has the most remaining shorts on a relative basis. And I think what you've seen this morning is some of those get squeezed out. Another thing people have been talking about that is a fact is that the breadth within the market is improving a lot, which is obviously going to be good for things like the Russell 2000. So we'll see if that strength continues. But we saw the NASDAQ break out of a year-long range. We saw ES break out of a year-long range. Now you have to wonder, is the Russell going to kind of follow in their footsteps because it's approaching the resistance of that year and a half range that we've been in as well. So that's kind of what I've been watching. I really don't have much to add. I think you guys did a really good job covering Bitcoin and crypto in terms of like the weakness that we're seeing. And, I think we kind of just got to digest all of the like rapid price action that happened. Or suppose it seems like some leverage is being cleared out of some of the alts in the short term. So we'll see if bids step in at, 29.5 or if they don't. But as of now, I would assume that they would, based on how we've seen kind of the market participants behave thus far. But we could be wrong. What do you guys?
Yeah, I'm just kind of pointing out something that I probably should have noticed earlier, but I mean, it's just this is technical trading. Tags the highs, tags the lows, tags the highs, tags the lows, tags the highs, has yet to tag the lows. Now, on the alternative, you could also look at this as potential lower high set, and if it holds this low, that's an equal low and likely would move back to the high. So if you're, CJ, Monte, and I all have different trading strategies, but, I think the fun of this show is kind of just spitting it out whenever you kind of see something that how you trade. And this is exactly how I trade, at least on a higher time frame now. And a lot of times this is how I trade in the lower time frame too. Because if you look at the 5 minutes and you're just sitting in a range, well, you're doing the same thing. You're selling the highs, you're buying the lows, and you rinse repeat. So for this to tag the lows, it needs to form a lower low as opposed to the higher low that it sets, or that it's been setting since the 30th of June. So just something to further watch out for on your charts. Maybe mark that out moving forward. But, like Monte, CJ, and I kind of said, is most likely this is the outcome. But if it holds this level, we'll look for 31 or, higher. So that's kind of what I'm looking at. But enough about my charts. CJ or Monte, I know you guys are looking at different stuff today. So, which one of you wants to get that chart up first and show us what you're looking at?
I beat you to it. I think this is maybe the best looking chart in the markets right now, and that is Apple. We talked about the Magnificent Seven and how if the DXY does continue to slide, that some of these big tech names will continue to grind higher. You're seeing it today with Apple, despite the fact that the DXY is barely down. Down 0.09%. Apple looks strong and looks like it could break into new highs here, and I think it will this week. That being said, I'm not trading it right now. The one trade I am in is Google, and I actually entered that today. Bought some at the money calls at 125, and essentially, my reason for doing this is going back to the beginning of the show, what we talked about, looking at the DXY. Like, I'm not convinced that we've seen the worst of the downside price action in the DXY yet. And what tells me that is the fact that, we haven't seen any sort of significant bounce. So I think that although we're seeing some profit taking today, I think that if you look out, before earnings, which is a major catalyst for basically every asset in the queues has earnings coming up. And I think until earnings, I said it last week and I'll say it again today, until earnings, green light for a lot of these assets. And you can see it with Tesla, right? Like, people are just running this up merely because earnings are coming and people are betting on positive earnings. But I don't want to play the betting on earnings game. I'm more than content to play the game of riding these assets prior to earnings, getting in first, and then riding that upside potential into earnings, taking some off the table before earnings. If I think that it's a coin flip, then I'll take everything off. But if I think we could see some more positive price action, then I'll leave some on. But either way, between now and Tuesday the 25th, I'm long Google, and I think we could see some really nice price action this week in a lot of the big tech names. So that's where I stand. That's really the only position I'm in right now. I know, last week was a crazy week for the alts, but I think there's just so much opportunity in the NASDAQ right now. That's kind of where my focus is at.
Yeah, I haven't.
Yeah, sorry, Oh, go ahead, CJ.
Yeah, I was just going to share some charts of kind of the points I was making earlier, just regarding like Russell, for instance. So when you look at like the top of this range, it's very clear like where the resistance comes in and ultimately like where the stop run levels could be. And, traditionally, NASDAQ is a leader of a lot of these indices, and then kind of ES follows based on the weighting. And then, as I had mentioned with the Russell, as well as kind of the Dow, you have a lot of breadth of the market, or in other words, like a lot of the smaller stocks. The narrative a lot of the year has been like you have a handful of names that have really been leading the NASDAQ, but now you're starting to see companies in the Russell take hold. So just to compare this very briefly with like ES, or I guess I should start with NASDAQ. NASDAQ really started ripping, earlier in May, once it started seeing the initial short squeezes. Then, ES basically followed it like a week or two later. And as those continue to make local price discovery, Russell is kind of like looking to be maybe part of like the rotation. So I'm wondering if this bull trend continues throughout the week and takes out some of these stop levels. Either way, I think it's pretty clear that like, below this level, the idea is kind of wrong, or at least you can get out and perhaps think about re-entering if the idea is still relevant. But right now, I like doing trend following in non-crowded markets, and it seems like Russell is kind of an example of one of those right now. Yeah, a lot of these things have just gotten nuked. Guys just got to just wait to buy them.
That was a good. I will say, CJ, you had a good long call our last session. Because I think that big green candle on LDO was when you entered last Thursday. So good trade there. One thing I wanted to pull up that was in relation to what Monte said, and I was looking at price action and kind of generalizing the dates, and I was like, I wonder what previous earnings did to Tesla, because like Monte made a really good point, in my opinion, and you can kind of tell that there's some volatility amidst, and I would assume that earnings would be the cause of some of that volatility. So a lot of gaps around earnings as well, but. So, this was earnings, furthered sell off into 2023, bullish earnings early, I guess technically bullish because after the sell off, it ended up rising higher. And what I would say is, to kind of agree with Monte's thesis is it's obviously moving quite higher. RSI is quite overbought. And it definitely still has room to head higher, but, I'm looking at this equal high up here, and I'm also looking at earnings 3 days away. And, it makes a lot of sense if, kind of grab these highs and then, sell off after earnings, maybe down to this support level or the 1 day estimated 200 moving average. So I just thought that was a bit interesting because Monte made a really good point there. And I was like, I wonder if there's any patterns that we can spy. So I would probably bet that, declining volume on a rise with earnings in the future means Monte is very much onto something here. So just wanted to bring that up. Do you have any other thoughts around that?
I was just going to say that, you'll find the same thing to be true with most other big tech names as well. Whether it be prior to earnings or post earnings, there's, some pretty tremendous volatility. But one thing that I think is particularly important this time around is like, there's still tremendous negative sentiment. People are still, calling like for the tops of the market and calling for the market to correct and pull back. And I think that if earnings are just remotely neutral, seeing the puts unwind will result in these assets climbing higher. And people that have made speculative bets to the downside short, like earlier in the year, that bought puts, earlier this year, and have been getting burned and seeing their plays not come to fruition, like, yeah, now would be a time to unwind those positions because earnings could potentially be a positive catalyst that would completely blow you out. So it's not too surprising to me to see that in this instance, right now we're seeing Tesla run up into earnings, and I think we'll see that with a lot of the other big tech names like Google, Microsoft, Apple, etc.
And if I recall correctly, last earnings, we saw a lot of jumps, and then I think a lot of people will play options on earnings too. I mean, you guys come from Market Rebellion, so you guys know that very well. But a lot of times, you're fearful in the overnight session of all of those gains getting sold off by the time you can actually sell when the market opens, sell your options. So I think last time everybody it was easy street if you were playing longs. There was virtually no pullback. So it would make sense that there's a little bit more trickery here as the bulls load up and the headlines are as CJ will tell you. Getting very bullish at resistance. So just something to watch out for there. Hold on. Bitcoin I just got a $200 drop. My AGGR is lights up right now. Let me see if I can pull it up here.
We're rapidly approaching that 29.5 level. And I think if we do hit that level.
And I'll just show something. I mean, this is not a perfect science, but, CVD, both spot and perp CVD is just, both been dropping like a rock. And we had this divergence this morning. This was actually why I placed shorts this morning. It's because we had some early divergence. And so now, if you're ever bored in trading, then I would highly suggest the AGGR page just because of the ticker tape. It can be quite amusing. But yeah, I mean, we're just, I just kind of wanted to highlight that because it's happening live. Might as well just kind of keep this up, see what happens. And this is also fun too. So it's pretty coordinated selling. All exchanges participating. So we can kind of talk around this if we just want to talk about the dump. But if CJ or Monte have any other trades, I mean, I'm short and I've been kind of feeling that liquidity grab lower. So we'll see if some spot buys come in. Maybe we'll place a long live on stream. But unless you guys have anything else, maybe we just kind of patiently wait for 5-10 minutes, see if we get a nice buyback.
Yeah, I mean, we're approaching that level where the buyback would occur, but the fact that Bitcoin's dropping so significantly right now leads me to believe that there's going to be a lot of opportunity to play the downside in a lot of various assets. And one in particular that I liked that was on the Trade the Chain dashboard this morning for hottest tweets was Maker. And this one,
Dino DeFi has been having a great time.
It has, but Maker today, not so much of a great time. And that's okay. Like, not the market itself isn't having a great day, so seeing it down like this, shouldn't be too alarming. But ultimately, like, these wicks are what alarm me the most. And like, just look at how much distribution occurs above 960. Like, no one is a buyer above 960. These are like all sellers. Everyone's selling into these levels. And to get above 1,000, I think it would take some significant risk on price action. And with the fact that, it was one of the hottest coins this morning in terms of tweet volume, and the fact that Bitcoin's dropping hard, I could see this one coming down, retesting the lows here at around 835 or 832, somewhere in this range. I think that's definitely plausible. If we see Bitcoin continue to drop, then again, we'll have to see what happens. Bitcoin coming back a little bit here, but
decent little reaction. And I'm gonna go ahead and pull up my chart really quickly because it directly relates to what I just talked about. Equal lows. So remember we're and I'll zoom out to the 4 hour, make it a little bit more easy to tell. But we're targeting obviously this level down here. It doesn't have to tap it. Price never has to do anything. But if it holds this low, that's basically a sweep of the equal lows. And I would expect us to probably end up grabbing this liquidity before we end up heading lower. So that is if the 4 hour closes above 29.9, I'd say. So something to. And when's the 4 hour close next? In 80 minutes. So 80 minutes to salvage 29.9, in my opinion. And else we will head to 29.5 at least. But another coin I wanted to highlight, which I think deserves the award of plunge protection. The team should win plunge protection award, but I mean, this is just an absolutely fascinating chart, and we're looking at BNB here. So just an absolute mess of a chart. And as you can see, definitely one of the weaker coins after that bottoming in early June. But there's been the short interest is absolutely insane. I should have my funding rate chart here.
I mean, it's up.
BNB. Yeah, look at the funding rate for BNB right now. 0.12% on Bybit.
Wow, that's a lot higher than it was this morning too.
Yeah, and so I hand to God, I am short BNB right now, but I'm just absolutely blown away at the strength of this 241 level, 242, whatever you want to call it. It's quite crazy. I've been trying to target this 230 level for something like this, but man, it's tough. So I'm hoping I'm going to hold out for maybe a little action like we saw on the 4th of July, but this may get closed if BTC reclaims 30K. All right. Well, I think CJ, Monte, and I are itching to get back in front of the trade stations after this price action. So, if you're not, I'll just kind of say it again. If you're not in the Trade the Chain community, every morning, CJ and Monte and I are placing trades, creating videos, giving outlooks for what we're seeing either before the U.S. Open or at the U.S. Open for trades into the day. This happens every single day. So if you want in on that action, then I would go ahead to tradethechain.com. We have a 14-day free trial that gives you access to our data, that gives you access to our community, that gives you access to our emails. So you can try it all out risk-free and get those daily updates in your Discord, in your inbox, wherever you want it. Because, although we don't have 100% hit rate, we've been trading pretty darn well in there. And we definitely will tell you what's up with an unbiased outlook. So would highly suggest that if you want to follow along more closely, because only 30 minutes an hour every Monday, Thursday is not gonna solve your trading woes, but being in the TTC community very well might. So with that being said, CJ, Monte, any wise words for the week? Obviously, we're looking at a dump on a Monday, maybe get some inspiration on a Tuesday, but anything final from you guys?
CJ texted me this morning pretty early, bright and early, actually, earlier than he's usually awake, I'd guess. And he said he was fired up. And I would say I'm feeling the same way. I'm feeling fired up this week. I think we have a good week ahead of us in terms of positive price action. And, regardless of whether or not the price action is positive or negative, I'm just happy we're getting some volatility, because volatility provides opportunity, and opportunity means chances for us to make money. So really, at the end of the day, whichever direction it is, I'm happy to take the position. But I do think that we're going to see turnaround Tuesday take effect tomorrow. We're going to see equities start to rally once again into earnings, and that will bring Bitcoin with it. So that's my outlook for the week. But of course, we'll have an episode on Thursday to see if that comes to fruition or not.
Yeah, appreciate it. Probably just going to try to be a bit more conservative. If I'm going to look for longs in terms of crypto, similar to what I said with the DXY and what Monte said earlier, just wait for a little bit more strength. I'd rather be a little bit more comfortable doing that as opposed to just jumping in right away. But should be an interesting week, and appreciate you guys for tuning in. We'll see you next time.
Awesome. And if you want those updates of when we're jumping into trades and jumping out, there's only one place to get it, and that is signing up at www.tradethechain.com. We also have a pretty nice referral program too. If you have friends or have a referral network, you can earn up to 40% per referral, which is nothing to laugh at when you're thinking about it long term. So good luck. Happy trading. See everybody on Thursday.